If Sandisk is a stock you're interested in, this video is for you. Today we're going to analyze if Sandisk stock is a buy from three perspectives. First, we're going to go under the hood and look at it through the lens of the institutional investor using supply, demand, and who owns the inventory. These are the controls institutional investors and market makers use to move markets by forming market tops and bottoms. And what better place to enter a position than at the bottom, but maybe not for Sandisk. Second, we're going to look at what the news has to say about the information available to the public. Third, we're going to look at what AI has to say in case there is information deep in the bowels of the internet. As a must, it is important to note this video is for educational purposes and should not be used for financial advice. But bottom finders are not financial advisors, but a group of smart technologists that know how to model and analyze data. So let's jump in. First up is the bottom finder supply and demand charts. All the numbers line up to tell us that Sandisk stock is in a supply zone and the prices are premium. Our technology calculates the demand zone to be between 30 to 50 for all stocks, and Sandisk is at 60, which is the threshold for the supply zone. We can also see that the supply is owned by the retail investors, and this is also confirmed by our custom rendition of the OBV, which tells us that the retail investors are in fact holding the stock. The net volume has also topped out, so the inflows and outflows are about equal. It seems like the stock at this point is trading hands, and most likely between the institutional and retail investors. Want to guess who is exiting? You got it. It's the institutional investors. Based on where the stock sits in the daily chart, it is at an all-time high. It appears the accumulation phase for the stock may be starting soon as big money begin to shake the tree loose. It wasn't long ago, maybe but 7-8 months ago, that this stock was sitting at 50. It is now upwards of $900. It is running in line with the sector ETF based on what we're seeing. It may go sideways for a week or two, and we expect it to retrace back to a more reasonable range. If you decide to buy now, be sure to hedge because frankly, this is not a place to buy this stock. People buy stocks because they will go up in price for them to sell for profit. So ask yourself, how far can this stock continue to run based on where it is today? So next, we will discuss the supply and demand chart that Bottom Finders offers. For the technology sector, we do see a climb in demand. This is great that sales are picking up. Interest in stocks in technology are beginning to excel. The supply, having it continue to run sideways, essentially tells us that there are still discounted stocks out there. Perhaps there are several different industries, including electrical products, where the demand is extremely high. You also have radio and television broadcasting. You also have electronic components. A semiconductor, which is where Sandisk lives, is certainly picking up. The demand is going down, and the prices are beginning to seem more on the premium side. Looking at the numbers themselves, semiconductors has picked up in demand of 4 points based on the last day of trading versus the past 2 weeks. The supply has gone down, the net vol has gone up, and the OBV has gone up. So there's definitely an increase in buying, and people are taking interest in this stock. Looking at the sector index, sector signals, rather, technology has certainly experienced a jump in the last 7 days. These signals are offered by bottom finders that indicate when a stock hits a bottom, but certainly Sandisk did not alert us on this one. There are other areas of the market that, other areas within technology that have alerted us. And Sandisk is certainly not one of them, being where it is today. This is also another rendition of the sector signals bar graph where we look at the 10-day, 20-day, and 30-day. Again, technology continues to light up with signals being at the bottom. Again, semiconductors are not in this group. It is other groups that are igniting these signals. Now, looking at the Sandisk daily chart, this stock has experienced explosive growth. It had gone from 50 somewheres on the order of 7-8 months ago to 926. So the question is will it continue to rise? We do not believe it will continue to run up. We think it's going to go sideways. There is news about it going onto the NASDAQ listing tomorrow, but we will see that in the next section of the news. And in moving on to our news analysis, First up is from Seeking Alpha. Analysts are calling Sandisk a high-growth buying opportunity, citing strong upside potential. However, they're also warning investors to be cautious of a possible sell-the-news event in April, meaning short-term traders could take profits after anticipated catalysts. From Zacks and TradingView, a hot debate is brewing between Sandisk and Marvell Technology over which is the better AI infrastructure stock. Both companies are benefiting from the artificial intelligence boom, but investors are weighing storage demand versus networking and chip solutions. 24/7 Wall Street asks the big question: should investors buy, sell, or hold Macron Technologies at elevated prices, or choose Sandisk instead? This signals growing investors' interest in semiconductors and memory names tied to AI and data center growth. And from Motley Fool, Sandisk has landed on the list of the smartest growth stocks to buy with $1,000 before the NASDAQ composite potential move higher, showing confidence in the future upside. Bottom line, sentiment around Sandisk is bullish overall. Analysts see growth potential tied to AI and storage demands. But near-term volatility remains possible if traders lock in gains after the recent momentum. Something to think about. Now let's dive into what AI has to say about Sandisk. AI says smart money appears to still be flowing into Sandisk, driven by surging interest in artificial intelligence infrastructure, memory chips, and enterprise storage solutions. Analysts estimate net flows of roughly $2 to $3.5 billion over recent sessions as hedge funds, institutions, and passive index funds build positions. The biggest catalyst is that Sandisk is set to join the NASDAQ 100 on April 20th, a move that could trigger automatic buying from ETFs and index tracking funds. Historically, these additions bring fresh liquidity and strong short-term demand. Another major driver is the continued boom in AI data centers, where demand for high-performance memory and storage is accelerating. That has helped shift Sandisk's story from cyclical chip maker to an AI infrastructure growth play. However, investors should note some caution sign. After a massive rally this year, traders may look to take profits after an index inclusion or upcoming earnings, creating what Wall Street calls a sell the news event. Most desired sectors within the technology right now are AI, semiconductors, memory, data centers, networking, and cybersecurity. These are all lining up for Sandisk right now. Least desired, legacy hardware and slower growth software names facing AI disruption. Bottom line, from AI's perspective, is institutional money is still moving into Sandisk, but momentum traders are now joining the trade, which means higher volatility ahead. That's where institutional investors begin to exit. Many fund managers favor buying pullbacks rather than chasing sharp rallies. So this concludes our analysis of Sandisk. Bottom finders believe it is at or near a top of its range. It is at the most premium now, and an all-time high, 1,000% over what it was 7 months ago, and will most likely trace back to the 600 to 700 range, if not lower. I'm sure some of you will not agree with this assessment, but I invite you to leave a comment. Thanks for watching, and be sure to look for our daily videos on supply and demand, stock, and sector analysis. Thank you.